Manish Sonthalia, Vice President Fund Manager at Motilal Oswal Asset Management, joins us this afternoon. Manish, appreciate your patience. Couple of events at RBI headquarters and at North Block here in Delhi have thrown our schedule out of gear completely. Market sold off, Manish. Some say it's unwarranted. What's your own reading of the market sell-off today?
I would think slightly overdoing the negatives which came out of the monetary policy. So yes, it's negative for banks per se, and banks carry the maximum weightage in the headline indices. But we may be trading at the lower end of the expected range, rather than seeing a further big sharp fall off from the current level. So I'd be inclined to be having a positive bias rather than a negative at this point in time.
I was listening to some bankers, Manish, afternoon, Prashant here, and they were saying that they'll pass this on, this hike, to whatever extent it'll vary bank by bank, but they're going to pass this on.
No, but if you see that the combined impact of both the savings rate increase and the provisioning requirements, that would mean a 50 basis point hike in base rates. And once you increase your lending rates, the fear in the market is that your NPAs are actually going to rise. And what we have seen in the PSU banks results in the last quarter is that a few of the banks, even the good ones, have seen a sequential increase in gross NPAs. So, Bank of Baroda saw a 14 percentage point increase on a quarter-on-quarter slippage in gross NPAs over the OBC 8-9%. So that's the big fear, that the asset quality may deteriorate with rising interest rates. Now that the bankers have taken a call to increase lending rates and deposit rates at the shorter end, I think one should be bracing ourselves for increased slippages. That is something which is new and would have to be built in the models than what it was before. So I think the banks are pricing it to that extent. But having said that, I think valuations have become much more comfortable even after what we have seen today. Credit growth may moderate and would be expected to moderate. But I think a trade-off between valuation and the asset quality and the growth parameters, it still makes good sense to buy into banks for medium to long term.